We've got a special guest joining us. Kranthi Bathini is here with us on Newsline this morning. Kranthi, good morning. The hope really was that 84,000 is what the Sensex would reach today, but it seems like that momentum has slowed down a little bit in early trade.
Yeah, Kartik, markets are taking a small breather at this point of time, but FIs have been quite active in the recent trading days. So we need to see how the FIs momentum is going to be continued. They are the net buyers yesterday. If they continue their buying spear, definitely markets can touch the new highs that can be possible. At this point of time, we need to see how the day going to progress. It is just we are just 20 minutes of the trading day after the opening. If the crucial levels to look for around 25,400, this is the level Nifty has to sustain. If this level can be sustained, we can see the new highs going ahead in the coming weeks.
Okay, the US markets are nearing their all-time highs, but India still seems to be, at least on the benchmark indices, India still seems to be about 2,000, 2,500 odd points away from the September 27th highs on the Sensex. How long, Kranthi, in your mind, before India is able to reclaim all that lost ground from September till June?
Kartik, as and when we come to this range, something unusual is taking place. That can be external factor or geopolitical events that are disturbing the party. Market is trying to gain this momentum, but something unusual is taking place around this level. So we need to see how the weekend is going to progress, how the geopolitical issues and also the big trade deal decisions are going to come up. So these are the external factors creating some kind of uncertainty around this range. If market could able to come through this news, okay, we can see the new high that can be possible. The joker in the pack, crude, has been right now coming to the comfortable level to country like India. If this crude oil correction going to continue, we can see most probably the market touching new highs. And in next few days, next few weeks, we're going to enter into the earnings season again. So Q1 earnings season and also the progress of monsoon has been good. If these internal factors going to progress well, we can see the new highs going ahead, Kartik.
Okay, well, everybody seems to be hoping for those new highs to be made again, Kranthi. But from what it seems, the fundamentals, the India story looks intact. Monsoon is unlikely to play spoil sport this time around. And it seems that even the external uncertainties have been priced in. So what is really holding back investors from putting in more money right now, whether these are retail investors or institutional investors abroad? What is holding them back? Why are they sitting on the fence when it seems that we are fairly certain about all the uncertainties which are likely to hit us?
Yeah, Karthik, one thing is whatever be the discussion we are making about the growth prospects and also the macro development are concerned, everything has to get translated into the earnings. Always stock prices are slaves to earnings. So the earning traction has to take the momentum. That's where everybody waiting on the sidelines, and especially the foreign portfolio managers and also the long only fund managers and also the DIS have been waiting for the earning traction. Once we get that earning traction of a kicker, there will be a flood of money that's going to hit the markets. That's where the overhang, whatever be the monetary policy decisions, that the rate cut, the cool off inflation, and also gaining the demand and the GST collection, everything has to transform into earnings. That's where the market has been waiting to take the renewed interest in the markets at this point of time, Karthik. Once we get the earning traction, we can see that momentum again.
All right. So earnings is all that investors are waiting to see. Kranthi, I want to bring in the sectoral perspective now, and I'll start with the banking sector and mixed cues coming from the banking sector. Remember, the RBI bulletin spoke about transmission of that 50 basis point rate cut to lenders and to borrowers, but that seems to be, or perhaps that seems to be one of the many triggers which is disrupting the scene on banking stocks this morning. While SBI is up about 1.5%, you're seeing a 2% decline in Bajaj Finserv this morning, and even HDFC Bank is down about 1.2%. Bajaj Finance is down about 1.4%. Mixed cues coming from the banking sector. What's going on here, Kranthi?
With respect to the banking sector is concerned, the stocks both in the PSU as well as private sector, they have been in a consolidation phase. Recent rate cut definitely helped the banks. The liquidity conditions has been improving. What exactly the banks have been waiting is the institutional lending has to go up, the capacity expansion and the credit growth has to take place in the banks to gain the earnings expansion. That's where the banks have been in sideways at this point of time. Definitely, once the issues of uncertainties with respect to the uh, trade war that's taking place right now, once we get the clarity, we can see the expansion of the credit going ahead. That's where the banks are going to take the momentum in the medium to short term. We need to see how the further rate cuts that are going to come. That's also one of the key worry in the recent days. The crude was a worrying factor. So these are the reason, okay, investors are sitting on sideways in the medium to short term. But definitely on a longer term perspective, banks are considered to be the epicenter of the growth, center of the growth. So any development in terms of the GDP and also the growth segments are concerned, they are going to have a positive impact on the banking sector. What's stopping at this point of time for the banks are concerned is the expansion of the credit that has to take place going ahead. Both the private sector capex and the government capex is going up. And once the traction comes up, banks are going to have good NIMs in the coming few quarters.
All right, and it is the banking sector that seems to now be dragging the markets. Let's pull up the Nifty 50 heat map again and see. In fact, the market started in the green and they've now slipped into the red. And the Nifty 50 heat map tells us that the maximum heat is actually coming from the banking and financial services side. Meanwhile, better news coming in from the IT space. Kranthi, we talk about the IT space quite often, and it seems that this time around the Nasdaq hitting almost lifetime highs is translating well for banking, for IT stocks this morning. We've got TCS, which is up about 0.5%, HCL Tech up about 1% or so, Infy is also up about 0.25%. IT sector trying to offset the negativity from the banking sector, but failing just because of the sheer size of the banking and NBFC block on the Nifty 50, dragging the markets down. What happens now to the IT story from here on, given the fact that tariffs or oil prices for that matter are unlikely to impact the IT sector, Kranthi? That sector is dealing with its own challenges, of AI being one of them.
Yeah, Kartik, you're absolutely correct. There is a lot of uncertainty around on these points. And also the US growth, that looks to be greater challenge. Just when the tariff implications are announced, one thing is there were concerns about US recession and the growth concerns. And a quarterback in the month of Jan, there was humongous euphoria around the US economy is concerned. So the narrative is completely changed at this point of time. So next couple of quarters, US growth is extremely crucial for these tech companies. By and large, the broader businesses are concerned. So that's where the overhang. But we can see some kind of a cherry picking. Long only funds have been buying these bellwether IT companies. What we are witnessing in the medium to short term. But still, US growth worries have been a key concern for IT companies, because since these companies are trading at the long-term averages, we tend to see some kind of a medium to short-term and long-term interest that's getting emerged for these IT companies.